In this video, I'm going to share with you 3 clues that I look for to help me determine if the US30 is going to make a continuation or if it's likely to make a reversal instead. So the US30 does tend to have about 2 big moves during the New York session. We tend to get one in the first half. There tends to be a bit of a break, a consolidation, which happens around New York lunchtime, although I live in the UK, so for me that's around 4:30 to 5:30 in the afternoon in the UK. And then there tends to be a second tradable move in the second part of the session. So it's around 6:30 in the evening, but actually it's a completely different time each day. So it's around that time, but not exactly that time. So what we're going to be focusing on in this video is that second move and whether it's likely to be in the same direction as the first move or whether it's likely to actually be a reversal and be in the other direction. Obviously, depending on which one it is, you're going to be looking for a different strategy and a different entry. And if you are new to this channel, then welcome. My name's Caroline. I am a trader and a trading coach at Trading Angel. I've been trading since 2015. I've been coaching traders since 2019, and I'm an indices trader. So I trade mainly the US indices in the New York session, and in this video we're going to be focusing mainly on the US30 and examples in the US30, although there are some crossovers with NASDAQ as well. So one thing I look for when I'm trying to figure out if the second move of the session is likely to be in the same direction or if it's likely to be a reversal, I'm looking for what the consolidation during the lunchtime period actually looks like, if it's slanting up or if it's slanting down. If it's slanting up, or if it looks a bit like a cup or a bit rounded, that's actually a bit of a bullish sign. And if it's moving slowly downwards, that's more of a bearish sign. So just to be clear, there are sometimes very sharp reversals towards the start of the session, and I'm not talking about those in any way. We're looking at what happens after there has been a long period of consolidation, because the reversals that tend to happen at the start of the session are very sharp. They tend to be directly off key levels, and often the initial move is in a different direction to the main move of the day or what it looks like on the higher time frames. So we're kind of talking about what happens after around 4:30, 5:30 UK time. So in this example here, there actually wasn't a great consolidation. I'm going to just go forward to future date where I think we had a nice example of this. So on this example here, can you see that the first move of the session was this move that went down here? And then the range that was formed, can you see it went on for several hours? That was from about 3:52 to around 7:30. This is actually longer than usual. So it went on for quite a while, but can you see how it kind of was moving down? I mean, actually it's very flat in reality, but it's definitely not cupping or slowly slanting up. So you want to be looking at the direction of the range. And what can usually trip you up is no matter what direction it's in, you usually get a bit of a false move before the main move in the second part. So if it's slowly slanting down, kind of like what it's doing here, you do tend to get a couple false moves up before you then get the move down. So actually the ideal place to enter is at the top of the false moves up, even though that feels really counterintuitive. What feels a little bit easier to stomach is to set an alert at the top and at the bottom and just go with whatever direction it crosses in. But actually, if you are able to spot what the range looks like and pre-decide what direction you think it's going in, you can get a much better risk to reward ratio. First of all, your stop loss can be a lot tighter, and second of all, you can get a lot more profits with it as well. So the second thing that I look for is I actually look for what's going on the day chart. So one of the things that I always send the traders that I coach is a pre-market checklist. And on the pre-market checklist, we're looking at the higher time frames. Even though I trade on the 1 minute chart, I'm always looking at the day chart first for clues as to what the market's likely to do on the 1 minute. So I've got daily momentum and daily price action as two of the most important things that I'm looking for. I'm just going to go to the day chart now and show you, because what the market looks like on the day chart gives us a lot of clues as to how it's going to be behaving on the 1 minute. So when the market is in a range and it's going sideways, you see this area here, they're quite wicky candles on the day chart, and they're ultimately going sideways. They're not pushing in a certain direction. It's not in an uptrend or a downtrend. It's going sideways in a range. So what that looks like on the 1 minute chart is the candles pretty much just going up and down like this. So assuming that that trend is going to continue on the day chart, that means that on the 1 minute chart, you're more likely to see a reversal than a continuation, because the market isn't really pushing out of that area on the day chart. But on the other hand, if the market is in a really strong uptrend on the day chart, like for example, here we do have this really steep uptrend here, you're more likely to get a continuation on the 1 minute. So in this example, that would be, you might see a big move off the back of the open, a big push up. You might see a slow consolidation, either going sideways or slightly up. You might get a couple false moves down before the main move in the evening then goes up again. So that's what you could expect to see on the 1 minute if the day chart looks like this. However, if it looks like this on the day chart, you're more likely to see one move in one direction, either up or down, off the back of the open, perhaps a sort of cupping shape. We're saying it's made a move down. So kind of cupping shape, maybe moving slightly up, perhaps a couple false moves down, and then a move up in the evening. Or on the other hand, we might see a move up, going sideways, or either rounding over, perhaps a false move up, and then a move down in the evening. Looking at the day chart is really important to help you almost come up with a roadmap of what you think it's going to look like on the 1 minute. But then obviously on the day chart, you'll get times when it's in a range for an entire month, and then the market will completely push out of that range. So for example, we've got it going sideways here for about a month. This is really normal in US30 trading. You're going to get entire months when it just goes sideways, and how you have to trade in these times is completely different to how you trade when it's in a long trend. So you always want to check the day chart before you trade on the smaller time frames. But then obviously you do get the pushes out of it on the day chart. So can you see here, we're going sideways, it then starts to push down, and then we have a very steep move down here. This was when Trump started announcing all of his tariffs earlier this year. So how you'd then be trading here is obviously going to be very different to how you're trading in this part here. But these pushes out of the areas of consolidation are usually a result of economic data. So although it's really easy for newer traders to get wrapped up in technical analysis and candlestick patterns and think that's the be all and end all, effectively all price action is a visual representation of the state of the economy and how this market is doing. It is usually fundamental factors which push us out of these areas. And therefore, the third thing that I'm looking for is what's going on the economical calendar, earnings reports, economic data, particularly with the US30, what Trump's saying or what's going on with the Fed, those sorts of things, because those tend to be the things which actually push us out of these areas of consolidation and can help us to decide whether there's going to be a strong move in a certain direction because there's a reason why the market's moving in a direction, or if it's consolidating because it doesn't have strong enough data to make a decision. On my pre-market checklist, the very top is economic calendar, because fundamentals will always override technical. So that's the first thing on my list because it has the greatest weighting. And then the second thing on the list is search for Trump and Fed. So I'll do a Google search and I'll go to news, the news tab on the Google search, and I will see what's going on. So I'll see if there's any strong news coming out, which isn't just a pre-planned news release. And I'll also look at the earnings reports. So the companies which make up the US30, They release their earnings every quarter. So I'm looking at the earnings reports to see if one of those companies has released anything significant. And if there is something significant on the fundamental side of it, when I'm doing my fundamental analysis, then that could be a strong reason for the market to make a continuation rather than a reversal. It's more likely to make a reversal if things are a little bit undecided, if there isn't a lot of news out, or if there's big news coming up later that week. It might be a little bit undecided before that news. So I hope you found this video helpful. And if you did, make sure you give it a little thumbs up. And if you want to see more content like this, helping you with your trading on the US30 or the NASDAQ, make sure to subscribe to Trading Angel now as well.